Imagine uncovering hidden stock gems that could net you $10,000, all thanks to AI. Did you know that investors using AI tools have seen returns of up to 30% more than traditional methods? This isn't just a dream, it's a reality that can be achieved with the right strategies and tools. Welcome to Smart Money AI, where we dive deep into how you can leverage artificial intelligence for personal finance success. Today, we'll explore various AI stock analysis tools that can help you identify lucrative stock opportunities. We'll also provide a step-by-step guide to setting up a free AI stock screener, interpret AI-generated stock ratings, and examine a real-life case study of a substantial gain. By the end of this video, you'll be equipped with actionable strategies to boost your investment portfolio. So, let's get started. Make sure to stick around until the end for our best practices on incorporating AI analysis into your investment strategy. First, let's understand what AI stock analysis tools are and why they matter. These tools use algorithms to analyze vast amounts of data, identifying trends and patterns that human investors may miss. For instance, platforms like Zacks Investment Research have AI-powered tools that provide stock ratings based on deep learning algorithms. This means you can quickly assess hundreds of stocks to find potential opportunities without spending hours doing manual research. Utilizing these tools can drastically reduce the time you spend on analysis while increasing the accuracy of your investment decisions. Now, let's set up a free AI stock screener to get you started. One of the best options is Finviz, a popular financial visualization tool. First, head to the Finviz website and sign up for a free account. Once you're in, navigate to the Screener tab. Here, you can filter stocks by criteria such as market cap, P/E ratio, and even technical indicators. For instance, if you're looking for stocks with a market cap over $1 billion and a P/E ratio under 15, set those filters and hit Find. This can help you narrow down to potentially undervalued stocks that could lead to significant gains. Interpreting AI-generated stock insights is crucial to making informed decisions. Most stock screeners will provide a rating, often on a scale from 1 to 5. For example, a rating of 1 might indicate strong buy recommendations, while a rating of 5 suggests a sell. Pay attention to the underlying data driving these ratings. Look for stocks that show strong fundamentals, like consistent revenue growth and solid profit margins. Understanding how to read these insights can help you filter out noise and focus on the most promising investment opportunities. Let's look at a real-life example of how AI tools helped an investor achieve a $10,000 gain. Meet Sarah, who used the AI tool, Trade Ideas, to identify a stock that was undervalued. By setting alerts for specific price points, she was able to purchase shares of XYZ Corp when it dipped to $50. With the AI's predictive analytics, she held onto the stock until it surged to $100, realizing a $10,000 profit on her investment of just $5,000. This case illustrates the power of combining human intuition with AI-driven insights to maximize investment returns. Incorporating AI into your investment strategy requires some best practices. Firstly, diversify your portfolio. Don't rely solely on AI recommendations. Use AI as one of several tools in your toolbox. Secondly, always validate AI insights with your research. For instance, if an AI tool suggests a stock, check its recent news, earnings reports, and market trends. This holistic approach ensures you're not just following algorithms blindly but making informed decisions backed by data. Don't limit yourself to just one AI tool. Explore multiple options to gain diverse perspectives. Tools like AlphaVantage provide free APIs for real-time stock data, while platforms like Seeking Alpha offer community-driven insights. By using a combination of tools, you can cross-verify stock ratings and uncover even more opportunities. For example, if one tool rates a stock as a buy and another shows negative sentiment, dig deeper to understand the reason behind the discrepancy. This approach can help you make more balanced investment decisions. Sentiment analysis is another powerful feature of AI tools. Platforms like StockTwits leverage social media sentiment to gauge public perception of stocks. By analyzing tweets and posts, these tools can provide insights into market sentiment, helping you identify potential buying or selling pressures. For instance, if you notice a surge in positive sentiment surrounding a stock, it may signal a buying opportunity. Keep an eye on sentiment trends, but always combine them with fundamental analysis for a comprehensive view. AI tools can also assist in risk management. Tools like QuantConnect allow you to backtest trading strategies against historical data. This way, you can determine the potential risks and rewards of different investment strategies before committing real money. For example, if you backtest a strategy and find that it historically yields a return of 15% with a maximum drawdown of 5%, you can evaluate whether that fits your risk tolerance. Risk management is crucial to protecting your capital while aiming for those $10,000 gains. The financial markets are always evolving, and so should your strategies. Make a habit of continuously learning about new AI tools and features, as well as staying updated on the latest market trends. Invest in courses or read books on AI and finance to enhance your understanding. Join online communities where you can share insights and learn from others. Adaptability is key in this fast-paced environment, and continuous learning will empower you to make better investment decisions. When using AI tools, it's vital to set realistic investment goals. Instead of aiming for an immediate $10,000 gain, consider setting incremental goals. For example, aim for a 10% return over the next quarter. This approach allows you to manage expectations and reduces the pressure to make impulsive decisions. By focusing on gradual growth, you're more likely to build a sustainable investment strategy over time. Regularly reviewing your investment performance is essential. Set aside time monthly or quarterly to assess how your AI-driven investments are performing. Look at both your winners and losers to identify what worked and what didn't. For instance, if a stock suggested by an AI tool underperformed, analyze the reasons behind it. This reflective practice can help you refine your strategy moving forward. Keeping a close eye on your portfolio will ensure you're learning and adapting as you go. Engaging with communities can provide valuable insights beyond what AI tools offer. Platforms like Reddit and investment blogs can give you a pulse on what retail investors are thinking. Participating in discussions can expose you to new ideas and perspectives. For example, if a community is buzzing about a stock, it may warrant further investigation with your AI tools. Remember, the collective wisdom of a community can enhance your decision-making process. As we wrap up, remember that AI tools are powerful allies in your investment journey. They can help you identify opportunities that could lead to significant gains, like that $10,000 investment we discussed earlier. However, the key is to integrate these tools into a well-rounded strategy that includes personal research, community insights, and risk management. If you found this video helpful, Don't forget to hit that subscribe button and bell icon so you don't miss our weekly AI finance tips. Let's make smart money moves together.